Good evening, Dan Fitzpatrick here at StockMarketMentor.com, and it's June 1st. Okay, first day of the sixth month, right? We got a lot of money inflows coming in, and in this chart video, it's kind of like a typical thing that I would put at the front of a strategy session, but it just seems like, to me, this is important enough. I want to just share my thoughts with everyone, a paying member or not. I think this is an important day, and you see it all over the headlines. Oh, S&P, Dow make a new high and this and that and the other thing, and that's all good stuff. But this is what's interesting to me. The small caps, which, had kind of been lagging, see the S&P up, the Dow up, certainly the NASDAQ up big time. You're looking at the mid caps and the small caps, and they're just kind of sluggish, not really doing much. Well, today that kind of changed. Here up 1.6%, the IWM up almost 2%. So I'm looking at this and I'm seeing it's the first of the month, so money's coming in and it's being put to work. We also had some good ADP jobs numbers this morning, which is the precursor to the May jobs report, which I believe we get tomorrow. Man, those guys work fast. First Friday of the month, right? I think the market's expecting strong employment. And, of course, that lends credence to the whole Trump rally, economic growth, et cetera, all that stuff. So we got a lot of good things happening here in the market. I don't think the whole climate deal has any influence on the market whatsoever. It's getting a lot of headlines. I was watching the S&P when this was announced, and the market, it means something to Elon Musk and to everybody else who's like an international global wannabe, but it really didn't have any impact on the markets. So I don't really care about that. What I do care about, though, seriously, is the mid caps and the small caps. I think it's important. It's a really strong, positive development. But one other thing is there was a guy on CNBC after the close. I forget his name. Seemed like a really sharp guy, and he said something that really perked up my ears. He said the market shouldn't be up as much as it is. Then they're talking about other things, and the guy said, he was asked, how do you feel about the market? And he kind of nailed it. He said, I'm really bullish for now because the market's going higher. And that's the right way to look at it. But his point about the market shouldn't be up as much as it is. Guys and ladies, that's the wall of worry. That's the whole idea of why bull markets climb a wall of worry, because the market's always up more than it should be. That's what causes money to come out of the market, or at least not get put in, and then stocks continue to rise, and some of that rising is because of the guy, and let's face it, the entire market is made up of a bunch of individual people, bunch of individual investors. They didn't put their money in because they were waiting for the pullback. Then the pullback doesn't come, and money gets put back into the market, and that pushes prices higher. That's just the way financial markets work. They've always worked that way. So when I hear the market shouldn't be up as much as it is, I think, well, for crying out loud, now we're definitely going higher, because the guy said it, and he's absolutely right. The market shouldn't be up as much as it is. But it's going to go higher because it shouldn't be doing that. The Trump rally's over. The market's overbought. It's the most expensive that it's ever been. I get dogs and cats sleeping together, all this bad stuff. Well, if you look at what happened, back in the dog days of the last century, you'll see right here, the market shouldn't have been up as much as it was. And it just kept going and going and going. All this time, the market shouldn't have been up as much as it was. And finally, in 2000, at some magical moment in time, which will not be repeated tomorrow, but at some magical moment in time, the market rolled over and then we crashed. Same thing here. Market shouldn't be up as much as it is, shouldn't be up as much as it is until finally the market agrees and it crashes. What I'm saying is, the most money, just kind of as a general proposition, the most money is made right before the most money is lost. We get a nice little acceleration here, and then boom, it's lost. So don't forget to participate in this part where the most money is made, and just make sure you're covering your risk, you're managing it with stops, not nursing losing positions and stuff like that. Make sure that you're managing that, and then you're not going to get hurt too badly when the market rolls over. We've been waiting for the market to roll over for a long, long time, and it just hasn't happened. But if we look at the weekly chart here, you'll see, I've been talking about this for a couple of years, really. This inverse head and shoulder pattern in the market. Nice big move up, and then we get this sideways consolidation here, and then finally a breakout. So then we just have to extend this up, take the distance from here, add it to here, and what I'm telling you is we're just going higher. So you want to be long this market. Again, the mid caps, the small caps, these are in really, really good shape in order to move higher, so I want you to be there. Now, members, got a lot of stuff we're looking at, casinos, some cloud stocks, certainly some semis, as well as some food and Chinese stocks, not Chinese food stocks, but food and Chinese stocks that are working. So get over there to the strategy session now.